Live from Philadelphia, I'm Adrian Manns at the Money Show. I'm here with Jon Markman, and we were just sort of talking off camera about the way the industry shifted over the years, especially for those of us who actively trade. And you co-developed the MSN scanner probably, about 15 years ago, 20 years ago now, right?
Back around in the late 1990s.
And there was a ton of stuff out there. There were so many scanners back then.
Well, we were the first.
Yeah.
First one for the public.
Okay.
It's kind of an interesting thing. Before our scanner came along, when people wanted to scan the market for, let's say, large cap stocks with low PE ratios and
Right.
high volume spikes, et cetera, there was only one company you could go to. It was based in Chicago, and it cost $100,000 a year.
Right.
And they would send you CDs, basically, that had month-old data, and they would send it to you a month late.
Right.
So, when I went up to Microsoft in 1997 to help them start MSN Money, I thought this is a business we can really disrupt. And so we created the first real-time scanner of the market that was completely free.
And then the field got real saturated, right? Over the course of about 10 years, there were all sorts of scanners out there.
Right.
Of what's left, because a lot of them came and went, and I remember some of my favorites, and you type in the URLs, and they're not there anymore.
Mm-hmm.
What do you think of what's left out there? What's sort of a good basic tool for traders or investors?
I think for investors or for traders in particular, my favorite is FinViz.
Okay.
FINVIZ. They have a very comprehensive database. They have a very easy to use scanning tool, and I use it regularly. Another new one that's come along just in the past year is called KOI Financial, KOI Financial. They have a superb scanning and market scanning tool that's not very well known. I think people ought to know about it.
And when you set up the parameters for a scan, are you looking at things like analyst initiations, or are you just purely focusing on the company fundamentals?
I have a set of fundamentals that I look for. I like these days, of course, with the small caps being in the dump. We're looking for mostly larger, mid to larger companies with relatively low PE ratios that are outperforming their peers, both on a fundamental point of view as well as technically. And if you can, the market in the short term is a popularity contest.
Right.
And so you've got to stick with if you're going to trade, you got to stick with the companies that are popular. And this is, the tools at FinViz, and also tools that you can find at stockcharts.com,
right,
are the best way to find those kinds of names.
So, and what's your time horizon generally, just so people have an idea about it? Are you day trader, swing trader, position trader?
I'm primarily a swing trader.
Okay.
Although I have a lot of long-term positions that I think are essential for people today. I think the most important development in the world of business is the digital transformation of our lives. Where we once had CDs, we now stream. Where we once went to the movies, we now stream Netflix. This is a very large fundamental change in the way we entertain ourselves and the way we do our business. And so I recommend long-term positions in some of the companies that are at the forefront of that change. And some of those names are pretty well known to you. Microsoft,
right,
for sure, Amazon, and Google. That doesn't sound like it's very innovative. It doesn't sound like like hot new IPOs or hot new small caps.
Right.
These guys are in a dog-eat-dog world. Only a few large companies are going to remain, and Amazon, Yahoo, and Google are going to be among them, even if they're forced to break up at some point later in next year or the year after.
Yeah, Peter Drucker used to refer to companies like that as continual disruptors, right? And I think that's a pretty good characterization of what these giants are doing, right, to markets.
I agree. It's the reason that there aren't very many good stock equity IPOs is that the companies like Google, Amazon, and Microsoft are buying those companies before they go public.
Right.
And there's fewer and fewer small companies that are taking the market's attention. Yeah, small caps.
All right, Jon Markman, thank you.
Thanks.
All right, for the Money Show, I'm Adrian Manns.